presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Accept others the way they are. You cannot change other people. Just trying to change them to fit what you want them to be is like trying to change a dog into a cat into a horse. They are what they are, and you are what you are. Market-wise, let's take a look at it out here. We have the Dow Industrials up 104, Nasdaq's up 149, S&P's up 34. Gold contract down $6.40, trading at $19.10 an ounce. We have silver up 3 cents, $21.95 an ounce. Light sweet crude down $3.82, $70.97 a barrel. Notes and bonds. The 10-year note down 26 ticks, trading 113.26. The 30-year full point plus 26 at 129.29. And King Dollar's up 25 ticks, trading 103.618. The euro's at 107, the yen's at 134, and the British pound is at 121 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. We'll get into the futures because the futures want to go after this high-volume swing low that we just got 30 minutes ago. 40 minutes ago, and it's going to be intriguing because if you break it, it's going to go all the way down to the bottom of it. So right now, we had a high in the S&Ps out here today, folks, of 39.72. So we've already just given up 50 points, 50 S&P points. That being said, bottom line, you can give it all up. What it's going after right now is going to be this 39.11. If you get volume on the 39.11, then see, you don't want to be here. You can go right down to the very end. So let's see where we're at here. So we're going to start another bar in 1 minute. And this bar here, the bar that we're going to go into, has 44,000 contracts. Coming up here, we're at 29 right now. But as I said, this is where this always gets dangerous, man. If you go right, we're going to start this bar right at it. Well, look at it. It's going right after it right now, man. Okay, hold it. There it is. You love markets, man. This is crazy. Okay, so we just banged it. We just hit it. Now the question's going to be, there's no way that's going to do that many volume. Well, no. Hold it 1 second. Let's see. What do we got? 34. Oh, my God, that was quick. Hey, we'll find out. You got, it's hard to, I don't have a second clock on this. So we'll see how this shakes out, man. But now, if you close, so right now, what is that number? That's 39.13. We just hit it, and okay, so it's starting another one. Okay, it's starting another one at 14. You start going south here, folks, then see, you don't want to be here. Because then what you could do, you could go all the way down, and this would be a total mind blower. We could go down to 38.85, which was the low of today. Yeah, that's what happens in bear markets. That's the bottom line. NQs. We go over to the NQ. We take a look at the NQ out here. There she is. Okay, so we take a look at the NQ. It's going to be the same setup. Pull this back. Okay, so what the NQ just did, NQ just broke it. That number there on the NQ is 12,192. You're 10 points below it now. You had the expansion of volume. You're into the 12,203. Oh, yeah, you're in there deep. Hey, this thing can go all the way down to the bottom now. Pretty amazing. Gotta love bear markets, man. I mean, they're just so wild. It's unbelievable. Gold. We go into the gold contract. We take a look at the gold contract. What do we have with the gold contract? It's holding up well. Back, really sideways move with light volume. Yesterday, I think we did 300 and something thousand contracts. Let's see what we have here. So yesterday, 452,000 contracts. And today only got 245 on the back down. And if we go to King Dollar, we take a look at King Dollar. You have a sideways move with King Dollar out here today. You know, it's up 16 ticks, but it's really not holding price. So we'll see where this whole thing shakes out. Now check this out. This is I had well, I don't know if it's an epiphany last night, folks, but you know the bailout? I don't think the bailout, here, check this out. This is my take on this bailout. Because about 9:30 last night, you know, you're doing mental calisthenics, and you know, if you're in this business, you do that all the time, right? And I start figuring it out. And here, this is my take on it. Okay. So Silicon Bank, we know that they had a bad trade, right? So the bad trade is the treasuries, right? So they bought the treasuries. The bank buys the treasuries. The treasuries turn negative, right? For the bank in a monster way, right? The bank goes bankrupt, right? Okay. The Fed says the treasuries are worth 100 cents on the dollar. When we know that the Fed treasuries are not worth 100 cents on the dollar, the treasuries at that particular point, the 80 cents on the dollar, right? The Fed comes in and says, okay, even though you have 80 cents on the dollar, we're going to lend you 100 cents on the dollar. My take on this, folks, is that the Fed was actually not saving the bank. The Fed is saving the treasury market. Because so picture this. Picture how many banks have the treasuries on their books that are in losses for billions and billions of dollars. We know we're in the fiat system, and the fiat system basically is like a, you know, it's not a fake system because it's a system, but basically it's a system that the Fed could do whatever they want to do. And this is a typical example of something being worth X, and the Fed saying, well, in the market that's X, but we're going to make it worth X plus Fed. And I think that is the bigger issue. I think that's the bigger issue, and when you put it together, it's telling me that I bet they were shaking in their boots beyond belief, because the deal would be all these banks that have treasuries, you know, and of course we know that because we've had so much debt, it's like if some people stop buying our debt, okay, what do you do? So the regulation itself is a regulation to keep our treasury market up, because the regulation itself, okay, is saying, it's like me and you. Could you imagine you trade something and it's worth 80 cents, but then, you know, they'll say, oh, you have 100 cents on it. It's not even real. So that's where we're at. And it's amazing, man. Dow, it just gave it up. This market's going to pull all the way back. It'll probably go red before I'm off the air. Dow Industrials right now up 3, Nasdaq's down up 104, S&Ps are up 19. Stay right there. We'll come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials up 22, the Nasdaq's up 107, S&Ps are up 23. Let's get over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the hour. And don't forget, folks, Basil does an outstanding show here every trading day, 10 to 11 Eastern Standard Time. Also, it's a great newsletter, The Opening Call. Now, it's very easy to get The Opening Call, folks. Come over to our website at TFNN. You go into newsletters, you're going to see The Opening Call on the left-hand side. You can get The Opening Call for 1 month for $149. Get it for 6 months for $695, which is a savings of $199 or 22%. And then get it for 1 full year for $1195, which is a savings of $593 or 33%. Now, they all come, folks, with a 30-day money-back guarantee. As you get Basil's newsletter, you're going to see there's about 12 archives out there. You'll really get to understand how Basil looks at the market and how you can ride that wave. And those waves have been big. Basil Chapman, what's going on?
This is Nazaré waves, yeah.
Hey, let me ask you first. Are you guys getting hit with snow?
You know what's very interesting? It was raining very heavily, and they said at about 12 o'clock we should turn it to snow, and then we'll see what happens. Well, at 12 o'clock, there were these big flakes that suddenly started coming. I've never seen the switch so quick, where it went from rain to these big flakes, and now it's all gone. In fact, it's just a little bit of rain, and it depends where. Some places have got quite a bit of snow. Just where I am off 128, I always say on this side
because
of
Caitlin's right there too. I was curious. Yeah, okay, good. That's
so
good.
So that's so far it's good.
Okay, now let's talk about the waves in the market.
Okay, so there are a couple of things that are going on. Number one is, I'll start off with this middle chart right here. The middle chart, I talk about narrow rectangle patterns and large rectangle patterns, and cup patterns and arch patterns. And you can see inside this weekly chart of the Dow, there was this arch formation, and then we decisively took out the left side low, and that said that the next important support is this Chapman wave inside track. It was a repellent zone. For a while now, it's been a propellant zone, and that is really important. It's actually gone a little deeper than it should, and that makes me very cautious. So now what we're doing for subscribers to my opening call, we're just trying to trade, taking a small position, but in this case, we took the 3 times long, the UDOW, and we've had a core position for quite some time, but we have trading positions that we put on, and we see if it can rally and then take it off as the stops are hit and take a little profit, and we keep doing that. One of the things I'm looking at is the stochastic on the left side. This is the stochastic right here at the bottom is down at 8%. This is starting to get into an area where it very quickly needs to get into the teens. So that's one thing that I'm looking for. The MACD, the moving average convergence divergence, is still very negative. The vertical lines right here called the histogram, those lines are still expanding, meaning that the green faster moving average is still moving away from the slow moving average. That's going to take, I would say, it would take a move up into the 32,800, 900 area to really get the MACD to cross positive. So that's a big ask at this particular point. And the other thing is we've been raising cash because one of the things that really worried me last week was the way the actually for about 2 weeks now, is the way the XLF, which I always consider together with the semiconductor index. I like when the financials, that's the S&P Select Financial Spider Fund, is moving nicely to the upside with the market. It just gives me confidence. I haven't got any, other than practical reasons, I don't have any fundamental reasons why that should be, but it's really good to see the banks and the financials moving in a positive way to confirm. And the other thing is the SMHs, and this is a divergence I'm seeing right now. The SMHs, the semiconductors, are holding within a narrow band, and they try, whenever you see these two lines here, like this little red line, right here, let me expand it out a little bit there, and the green line, I call this Chapman inside track repellent zone. And because every time the price, look how often the price has gone right to the level, this inside track, and then it gets repelled. So today it went to the red line, couldn't make it. So this is going to be very important over the next, I would say today's Tuesday, I'd say going into early next week, if there's any chance that the SMHs are going, because I like when the SMHs lead the market up or down. In this case, it's in a holding pattern, yet the market has gone down. So it's really important for me to see the semiconductors move into the 251 area. That's 10 points up from here. I'm not sure what's going to do it, but that's what I would need. Now, there's another thing that I'm looking at. Schwab, I've used this as a kind of a benchmark for us because we are still long from way back in 2020 at 45, the IAI, which is the ETF for the broker dealers. I couldn't understand why the market was rallying so strongly going into the February high, and yet Schwab was acting so poorly, and then it couldn't hold that 200-period moving average, and it broke down, and it went just from that level at 76, just 5 sessions or so ago, it plummets down to around number 45. So now I just wanted to go through a little kind of a litany of things that I look at. I have a technique that I call the Chapman Wave price volume climax, and very often over a year you can see so many stocks that have bad news reports of something really ugly. They're on their way down, and then they have this massive gap down, and the volume is you can't even say it's double, but it's huge. It's way more than anything you've seen before. And I look at round numbers. So Schwab yesterday had a 45 round number low, and within this context, what I wanted to say, I had it as a buy for subscribers only if certain conditions were met, and it had to be under 55 before 10:20. Well, it got to 55, spiked up to about 49. It spiked up to about, I think it was 52, and then it went to 57, and then it pulled back, and then it went to 55, but that was later than I wanted, and here it is at 58. So my rule of thumb is that when you see this kind of climax to a bottom, there should be 28 sessions above this low of 45. It doesn't tell you how high. You need other techniques to look at to get that particular aspect. But it does say that the low in this case of Schwab hitting 45, it should go for at least 28 days above. And if it's holding very strong, they can go to 56 days. So I'm really intrigued.
So when you're saying 28 days, Basil, you talking about trading days?
I'm talking about trading days.
Okay,
yes.
so that's a month and 1/3, folks. There's 21
April,
trading
right.
days a month. Yeah.
Right. So it takes you into April. But what's really important about this, it isn't just Schwab, because Schwab was kind of indicating part of that whole financial sell-off. So I think it's going to tell me a lot about, and you were just you were analyzing and giving us a really good sense of the 80 cents to the dollar. Things are going on here. This is not a one-off deal. This is something that's going to be ongoing, and it's really complex. And there's a lot of if you look at it deeply, there's a lot of finagling going on. how the market deals with it is going to be very important. So I think you've pinpointed something really, I think it's a crux to what we're looking at here in terms of the financial aspect. How this unfolds is going to be really important. So that's one thing. The other is that I like to look at 6-month increments over decades. And very often, a low that's made in October can be retested in the semiconductors or the S&P in March. And sometimes it's the other way around. So I'm really watching this whole aspect of what happens in this month if we retest the lows that we saw in the market.
They are 2 big months. There's no doubt, man. Listen, folks, come over to our website at TFNN. Newsletters, opening call right on the left-hand side. Basil, have a great one, safe one. We look forward to showing tomorrow morning.
Thank you, Tom. You too.
Stay right there, folks. Come right back.
My gold report. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials up 77. The Nasdaq's up 127. S&Ps are up 29. Let's go take a look at Lennar. So Lennar, big builder, that's going to be coming out with their numbers after the close out here today, folks. So the low for the year is 62. The high is 109. They are looking to do $6 billion and bring $1.55 to the bottom line. So let's see what we got here. Okay, so lower price. What's that number right there? That number's 94. Yeah, so you're at 113. My take, we're going to 94. And you see what I'm doing here? Just going to those high. The last time we had any volume on the way up. And the swing low there is 94.38. You can see what's happening here. You popped up, let's see, that would have been last Thursday to 101.29. You had 3.3 million shares. You see how this 101.78? Yep, it got over it. It's going to close under it. It's going to have like 2 million shares versus 3.2. So this is going to be cool to watch after the close. See what exactly, what they talk about inside of the housing market. You know, basically how many houses they're going forward with, how many cancellations. The cancellations will be the big thing out there, I suspect. You know, we'll see where that shakes out. And, you know, we'll see what type of volume you got if, in fact, we get down to those lower levels. Let's go take a look at the oil market, because this is quite a beating. Well, actually, it's not quite a beating in the oil market. This is how the oil market's been trading, actually. But let's take a look at it. Blowing out the lows. Interesting. Oh, this is a big one. I brought this up before. Okay. So you have the volume behind the move. You hit 70, 78, and 70.86 is the low. Okay, I got to bring up the continuous contract now. We go into the continuous contract. Pull this back a bit. Ooh, this is dangerous. Dangerous. Look at this. Oh, this is dangerous. Okay. So, yeah, you have one more day like, holy cow, this is pretty wild, man. Yeah, I mean, the next leg down is $62. Yeah, pretty clear. And there's not much there at 62 either. Yeah, there is, I guess. That level right there. You break the 62, man, and you're going to be back to 39. Could you imagine a little back to $39, man? That would be, like, insane. Hey, it can happen, because you can see, if you're watching Tiger TV, these two are very small. And the amount of cars that were built up, this is a huge amount of cars. You're talking about months and months of cars. So, you know, we'll see with this. You get a break like that tomorrow or the next couple days. It looks to me like it wants to break tomorrow. That's how this thing is shaking out right now. Let's go to the XLE and see if the big dogs are following oil on the way down. So, I see what happened here. Okay, so the XLE already broke. Put this on. It broke its consolidation. That's a problem. Yeah, so the XLE is going to make its way down to 65. You're at 81. That's the consolidation. So the XLE loves huge consolidations, folks. Huge ones. That's why I always love trading them. Look at that. See, the top of the consolidation here is 94. The bottom is 68. And now you're talking, this is what's really cool, too. Okay, you're talking March. You're talking a full year. That's a full year out there. That's what they love to do, though. That's just kind of how they run. We go to ExxonMobil. We take a look at Exxon. You get Exxon, and, of course, you get Chevron, are the two big dogs. Exxon did the same thing. That's trading 106 right now. Not the end of the world. That wants to go back to like 103 or something. And then we get CVX. Yeah, CVX is in bad shape. This is, you know, for many years, CVX was in much better shape than Exxon. Now it's just the opposite. The bottom of the range on CVX is 132, and right now we're trading out at 159. So you got some, we certainly have some numbers there that are a lot lower. Let's go to Jose in Lakeland. Jose, what's going on, brother?
Good afternoon, Tom. Tom, I know we all love drama, but come on, SVB, the failed bank, they had like 15 branches between California and Massachusetts. They don't sound like a big player to me. I say sweep this accident off the highway, nothing to see here. Move along, move along.
Well, that's what the market's done. There's no doubt about that. There's no doubt about that.
Yeah. Hey, Tom, CDNS, we're knocking on the door for new highs today. Well, we haven't made new highs, but we're an inch away. Where does CDNS Cadence Design System, do we make new highs? Because we know what they're going to do. Expiration Friday, they're going to push these right up to the upside on all of them and squeeze everybody till 4 p.m. Friday.
Let's take a look. So your Cadence Design, the low is 132. The high, just as Jose said, 202.96, and we hit 202.89 today. So
Yeah.
this is still strong, man. Yeah.
Yeah.
This is strong.
I think they're going to try. They didn't bring it up here for nothing. I think they're going to try to push it right into options expiration Friday.
And let me see this for a second. So they're still running. That's heavy, man. Well, they got some business evidently, because that's a strong stock. This is particularly a strong stock in, a weak market. So that's something to pay attention to, man. I know you have been, but this is wild, man. Yeah,
it's this strong in a weak market. That's the key. Something's up here. A lot of institutions hold it, but just on the daily, I only care what it's doing today or tomorrow.
I'm with you, but don't go short, man. This wants higher price, man. Yeah.
Oh no! I'm long.
Good.
But I'm gonna wait till 4 p.m. Friday and then unload.
I think you get a good trade there, man. That's pretty amazing, actually. If you just saw that equity, folks, okay, that equity didn't give anything up. And, I don't think there's too many equities out there that did not give anything up. So, yeah, you get action, man.
Yeah, good deal. Much obliged, Tom.
Okay, man, have a great one. Have a safe one. Let's take a look at some of the higher volume equities out here today. And you're going to have your Tesla up $6.50. You got First Republic Bank, that's up $6.50. You got Charles Schwab up $5. KeyBank, that's flat. You got PacWest up $2.63. AMC is going to do a reverse stock split, I believe. You got Republic. What was that? No, you got Apple. That's up 79 cents. Inside, let's do this. Let's go NDX, inside the NDX. So what do we have here? Inside the NDX, you got, Facebook, man, is just cutting. You talk about cutting folks, but guess what? It's exploding their stock. Facebook's up 6%. You got AMD up 5.5%. First, Pfizer is up 5%. CrowdStrike's up 5%. Taken away from it, Rivian's down 4%. Lucent down 3.5%. Sirius Satellite off 3%. We go into the Dow Industrials. We take a look at the point-wise inside of the Dow Industrials. And what we have out here, putting positive points, Salesforce putting 42, American Express 36, Goldman 35, Microsoft 33. Taken away from it, Home Depot minus 21, Amgen minus 20, United Health minus 12. Stay right there, folks. Come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Dow Industrials up 158, Nasdaq's up 161, S&Ps are up 40. And bottom line, let's get over here and we take a look at the, where are you right here? There we go, Fed Fund. Okay, so check it out. So what we didn't talk about yet, and this is pretty wild because the CPI came out this morning, folks, and the bottom line, the CPI is not going down. So your next, calendar-wise out here, this is what's going on. You have March 22nd. March 22nd is when you're going to get the next statement and decision by the Fed. And right now we're at 4.5 to 4.75. That's the discount rate. And, you know, as of this morning, well, as of last night, the bond folks were not betting on another quarter point hike. Now, as of right now, they're betting on it again. Bottom line, folks, is that I'm not quite sure how they're going to, you know, basically drive this car down the road. But I suspect that you're still going to see the Fed go up another quarter point. And we'll see what ends up happening. Actually, let's look at all the meetings because inflation's not going away. It's not even close either. It's still running 6%. So if we take a look at this, the calendar, okay, so you have March 22nd, then we have May 3rd, then we have June 14th and July 26th. And right now, hey, but we'll see where it shakes out. They know for the, you know, the real bottom line is that, you know, you had that charge yesterday inside of all the bonds, because if we take a look at the 10-year now, what you're going to see is, you know, we didn't give it all back from yesterday, but it's quite a bit. Let's see this. Yeah, I mean, look at this. Not all of it, though. We started out the 10-year yesterday at 112.21, and we got up to 115.19. Now we're back to 113.27. So we hit 113.09. But pretty intense when you look at something like this, there's no doubt about it. If we go to take a look at the 30-year, we have 30. Come on, baby, where are you? I'll do this one. U.S. Let's do this one right. Let's see. Oh, let's see what this brings up. Yeah, this works. Okay. Oh, no, this is going to be the yield on it instead of the... Okay, so... Well, not quite sure what I have in front of me there. But bottom line is what you have had. Like if we take a look at the rate structure right now, what you're going to see, the 10-year right now is yielding 3.64. We were as high as 4.56 last week. Yeah, that's how quick this whole thing went south, folks. Let's go take a look at Apple. So it's intriguing, you know, you have all these companies cutting back, and Apple, one of the big things that they had is that they didn't cut back on their employees, but what they did announce out here today is that they're basically taking a look at the bonuses. And how do they put this? Oh, here it is. Apple is reportedly delaying bonuses for some of the divisions and may freeze hiring in certain parts of the company in an effort to streamline costs. The shift would reduce the rate at which bonuses are paid out of some of Apple's workforce. Bloomberg reported the new plan would see the April bonuses skipped and subsequently paid in October. The thing is amazing. Could you imagine working for Apple and you get this in an email and you know that they're sitting on almost $1 trillion worth of cash? It's like, really? Is that where it's at? But I suspect what Tim Cook is going to push out is that, well, listen, you're lucky you're not working for Facebook, because Meta, bottom line, that equity is much higher today and has been higher. And they basically came out this morning and said they're going to can another 10,000 employees and that they're going to close an additional 5,000 open roles that they have out there today. So you're talking about 5,000 that they're not going to hire, that they had open roles, an additional 10,000 that they're canning. And these are monster jobs, man, because I remember looking at the average pay, like at Facebook, is like, just a mind-blowing pay. I think it was like something like $243,000. I mean, it was like, right through the, let's see if I can find this in here, because it's like sick. No, I don't see it, but if we put the chart up, you're going to see why the market's happy with it, because now I think we're up to over 30,000 people. Yeah, so in 3 months, Facebook's gone from, it's doubled, more than doubled. It went from $88 up to $191, and look at that, it's still a disaster. Look at that. You know what's amazing is that, these equities, some of these equities that even bounced really big, are still a disaster. I mean, this is absolutely amazing, actually, how far it went down, because when you take a look at it right now, from the highs to the lows, we're still only at a 0.382, because the high in Meta was $384, and right now you're at $191. That's pretty intense. There's no doubt about that. Let's go take a look at the silver market, because what we had, silver, bottom line, was a laggard inside of the metals. Yeah, it's still a laggard. Interesting. You got volume up here yesterday with 70,000 today, but you got to watch this thing like a hawk, man, because that's telling me that what we're gonna see again, and the oil market might be telling us that right now, is that we're gonna see this dollar go topside once again. I don't like the setup of it right here. I mean, meaning that you were down yesterday. It seems to be, pushing. There's a lot of support at the dollar at that 103.008. That's about 500 ticks from where we are on the lower side. But you can see it's just kind of laying there. And my bigger picture is that I suspect 106 is 107 is going to be game. And we'll see if it's going to be the euro that gives it up, or what actually is going to be giving it up on the other side of the. Yeah, the euro. Yeah, right now I can see it's the same type of setup. I can see the euro getting a little bit higher, the dollar a little bit lower, and that's where I expect, that's where you're going to get the action that's happening out here. Dow Industrials right now, that was a quick, let me just look at this. Look at this, man. So the Dow started positive when I was on the air, went negative, and now it's up 200 points. Oh, my God, you're going to love it. Stay right there, folks. We'll come right back. Dow Industrials right now trading up 236. Nasdaq's up 191. S&P's up 52. We'll come right back.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow's up 213, Nasdaq's up 182, S&P's up 47. So you get, this always happens too, folks. It's just wild, actually. Moody's investment just came out and cut the outlook for cut the outlook for the whole U.S. banking system to negative from stable, citing the run on deposits at Silvergate, SBV Financial, and Signature Bank. It's saying while the federal regulators announced that all deposit of SVB and Signature will be made whole, the rapid and substantial decline in bank depositor and investor confidence participating in this action starkly highlights risk in the U.S. banking asset liability management accelerated by rising interest rates, said Moody's today. The Treasury, well, let's see, the bottom line is that, so they also put, let's see, the cut in outlook for the nation's banking system came as Moody's placed 6 of the lenders in review. That's First Republic, Western Alliance, Intrust Financial, UMB Financial, Zions Bancroft, and Co-America. I'm wondering how PacWest got out of that. Yeah, and that's interesting. So PacWest, what is that one doing out there? PacWest wasn't in great shape. Yeah, right now, PacWest. Yeah, well, we'll see what happens, man. But I wonder how they got away from that. PacWest, went from $27. That goes down to $5. And then today, you're running out here. you're up 3. You know what the amazing part is, too, with the Silicon Bank, folks, okay? And this is a regulatory issue for sure. The bottom line is that the CEO of Silicon Bank was on the board of directors of the San Francisco Fed, and the San Francisco Fed is the supervisory Fed for the Silicon Bank. And that's how these banking structures are set up. Oh, let me see. Hold it. Let me be the supervisor of my bank. Oh, yeah. That's always going to work out well. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night. Have a safe night. Come visit Tommy tomorrow morning. Kicks us off 9 a.m. Great show, folks. Look at him, folks.